Okay. So now, yes, three schedules we have done. Three notes or three schedules. One is share capital. Another one is reserves and surplus. The third one is long-term borrowings we have done. Next, we should go for the next one, that is sure, that is current liabilities. Correct? Current liabilities we have to start.
Yes, sir.
So under current liabilities, you have so many subdivisions. If you can remember that, under the current liabilities, you will be having trade payables, short-term provisions, and so on. Other
Yes, sir.
current liabilities. You try to remember only some important aspects from the exam point of view now, because we don't have much time. So non-current liabilities, you have two headings. What is that? One is long-term borrowings. Under long-term borrowings, what will come? Debenture.
Yes, sir.
And long-term provisions. Any provisions is there. Specifically, they would have given provisions, take here. Okay. And
Okay,
short-term, now coming to the current liabilities. Third one is current liabilities. Current liabilities, what are the subdivisions? First is short-term borrowings. Loan from bank, within 5 years, loan from bank, anything is there that you take, short-term borrowings. After
Okay.
that, trade payables. Trade payables. In the trade
Sir, loan from
payables,
bank is, sir, just to make sure, loan from bank is short-term borrowings only, sir.
yes, short-term borrowings only you can take. See the amount once and you can decide. Loan from bank, yeah, you can take it in short-term.
Okay, sir.
Okay. Then trade payables, I told you, trade payables, you will take creditors, bills payable.
Yes, sir.
And then other current liabilities, whatever is the current liabilities you feel less. Okay, we'll come to the problem now. We'll come to the problem. So we have done 3 notes. So the next one will be current liabilities. Under current liabilities, short-term borrowing. Any loans is there? Just see in the problem now. There is no loans
Yes, sir.
as such. There is no loans as such. So don't worry about that. Next we'll go for trade payables. Trade payables will go. Note number 4 is trade payables. So as I told, trade payables, creditors and bills payable will be there. Yes, you can see here, creditors and bills payable.
Yes, sir.
So you can just,
Yes, sir.
yeah. So creditors, I made it as red. So I'm going to take this creditors now. Creditors. So just I'll put here creditors, and then once again, creditors, you just look in the problem. Next, bills payable is there, see. Okay.
Yes, sir.
So even that I'm making red. So bills payable, just take that amount. Next, write the total. So now creditors and bills payable total 1,80,000 and 2 lakh. What will be the amount?
1 lakh 18, 2 lakh.
Sorry, 1
2
lakh 80
lakh.
and 20.
2 lakh, 2 lakh, 2 lakh, 2 lakh.
Yes, 2 lakh is the total. Now that is note 4 is over. Okay.
Yes, sir.
Next is we were in the third heading. Non-current liabilities was over. Current liabilities, yes, short-term borrowings. There is no short-term borrowings. Trade payables, we have done the trade payables. Any provisions is there, you should take care.
Yes, sir.
Provisions.
Provision for taxation, 25,000.
Yeah, it has provision for tax 25. So once, oh no, this is the first time. Okay. So yes, short-term provision for tax. How much is the provision for tax? 25,000, right?
Yes, sir.
So total will be 25,000 only.
Yes, sir.
Okay. Then almost we have done liabilities part. This is taken once. Just remember, provision for tax is done once.
Yes, sir.
Now, one more time you have to do. So next we'll come to assets now. Okay.
Yes, sir.
Balance sheet items almost we have done now. So we'll come to assets. Assets, for first one is tangible assets. Whatever is the tangible assets that you feel, just take.
Yes, sir. Buildings. There is
Buildings. I made it red. Next.
stock.
Buildings, after buildings, what are all the
Machinery.
fixed assets? Yes, good. Machinery, so I'm making it red.
And then there is stock, no, sir. Stock
No,
considered.
stock is different. Stock is different. So first we'll finish this. Buildings, wages. Any adjustment is there. See, always
Depreciation
depreciation.
of building by 10%, sir.
Yes, is there. So depreciation will come in different note. That will come under different thing. So what we'll do, we'll take once here. Okay. Depreciation will come in income statement also. In the assets also it will come. See, buildings is 80,000. Remember, machinery is 80,000. Remember. So I'll put it here. Buildings, furniture. Okay. Buildings and machinery. Furniture is there? No, na.
No, sir. No furniture. I don't see furniture. No, sir, it's not there. I'm not seeing furniture.
But in your college, they have given furniture. I
Sir,
have missed
maybe
it out.
it's nil,
You
sir.
know, it is there here. First item is only there. Can you see it now?
Yes, sir.
Actually, the page was head has come down. So can you see now? Furniture 40, buildings 80, machinery 80.
Yes, sir.
Okay, first furniture. I'm writing it. Can you see? Furniture is 40. Next, buildings is 80. Now, buildings we have a adjustment, depreciation, correct?
Yes, sir. 10% depreciation.
So I'm writing it here once. Once you have taken. So one more time you have to take. So buildings you are taking it here. Buildings minus depreciation. What is the percentage? 10%.
Yes, sir. That would be
80,000 into
10% or
10%.
80 is
8,000.
8,000.
Yes, 80,000 minus 8,000. So that will be
72,000.
So you have to minus there and you have to write how I am writing it.
And then
First
we
you
have to
take
add both of
inner
them
column.
and total, sir.
Later you'll add all this. And then you'll take machinery 80.
80.
Machinery is 80. If there is no adjustment, transfer to the outer column. Okay. So now you
Yes.
do the total now. 80, 72 and 80.
1,92,000.
Yes, 1,92,000. Correct. So now that is called as the fixed assets. Okay.
Yes, sir.
Now tangible assets is over. Next come to intangible asset. Any intangible asset you feel in the problem.
Yes, sir. Yes, sir. Goodwill is there, 50,000.
Goodwill.
50,000.
Any adjustment is there to relating to this also you have to see. So there is no adjustment. Goodwill is there. So I'm just going to write goodwill.
Only goodwill is there, sir.
Yes, only goodwill. So put separate heading as intangible assets and write it here, goodwill, and do the total also.
Yes, sir.
Okay. So now sixth is also over. Next, come to the next one. Non-current assets, fixed assets, intangible assets is over. Other non-current assets. Other non-current assets like yesterday we were discussing, right? Security deposit or non-current investment, all these things. Like
Yes,
I told you, four features. Sorry, what is that? This one, preliminary expense, discount on issue of shares. This is coming under non-current asset only. Next, non-current investment. Any non-current investment is there? See, any investment is there? You just put it here. Any investment is there?
Yes, sir. 60,000.
Yes, investment is there. So this is also taken once, 60,000. So now what you do? 60,000. Just put it. So total will be 60.
This has no schedule, sir.
No such schedules. You can just put it. All this comes under same schedule only.
Meaning intangible asset, non-current investment, all comes under note 6.
Yes. You can do it separately, or you can show it separate. First you put the heading as non-current assets. Under that you could put it as fixed assets. Put it as note number 6, And then write tangible assets 1,92,000, intangible 50, non-current investment 60.
Okay.
Then you have note number 6 is over. Note number 7 is inventories. Note number 7 is inventories. Inventories, as I told, closing stock is called as a inventory. What is the closing stock now?
Closing stock 1,20,000.
So closing stock is in the adjustment. You have taken once. One more time it is going to come. Where?
Balance sheet.
No, we are doing the balance sheet only. Na? Notes to balance sheet only we are doing.
P&L, sir.
Yes, P&L. Where also I told you. You remember? Changes in inventory, opening stock minus closing stock, I told you.
Yes, sir. Yes, sir.
So closing stock is 1,25,000. Yeah, closing stock is 1,20,000. So closing stock 1,20,000. Next. Next
There is
is
no note yet, sir.
no adjustments. Only one thing is there. Next, note number 7 is over. Note number 8, you have cash and cash equivalents. Cash and cash
Okay.
equivalent means cash at bank, cash in hand. Any cash at bank, cash in hand is there. You just take it here.
Yes, sir. Cash at bank.
So amount is 58,000. Before that, actually, okay. Before that, note number 8 is trade receivables. Current assets we are doing now. Now we are done with the first heading, non-current assets is over. Next is current assets we are doing. Under current assets, remember, trade payables, trade receivables, and cash and cash equivalents. Okay.
Yes, sir.
So now cash and cash equivalents is over. Next, trade receivables. Trade receivables means I told you debtors and bills receivable. Just see in the problem, any debtors is there.
Yes, sir. Data is 1,60,000.
And always debtors will have an adjustment also. Okay. Debtors
Yes, sir.
have
There is write off bad debts 10,000. So 50,000.
yes. So
Between
bad
1,00,000.
debtors I am writing first, and like next one is bad debts. Bad debts will be there in the adjustment. So I'm taking first in this note. Afterwards, I'm going to take it in income statement. So first we are doing the balance sheet. First take it off in balance sheet. So minus bad debts. Bad debts is 10,000. Next, is there any bills receivable? See in the question, bills receivable is there?
Bills receivable. Yes, sir. 50,000.
Yes. So make it red. Okay, now bills receivable is what? It is 50. So 1,60,000 minus bad debts. Now you have to
And
do like that, actually. No, see,
and also okay, so debtors minus bad debts, and then should we add the bills receivable?
one second. You just do it like this. First, you write in the inner column. First, you write bad debts in the inner column. So 1,60,000 minus 50, debtors will be 1,50,000. Next, bills receivable is 50. So total will be 2 lakh. Okay.
Yes.
So we have done this. Next, cash and cash equivalents is also over. Then note number 8 is over. Next, other current assets. Other current assets. So anything you feel, see, wages will not come, interim dividend does not come, audit fees, director's fees, freight charges. So we have done almost all the things. In the adjustment, you see 1 plus 1 plus, see, accrued interest on investment is there. So it
Yes,
is
sir.
an income. It is like a interest on investment is there. Once you take it here, 12,000, you call it as current, non-current, you can call it as what? Other current assets, accrued income. So you can put
Okay.
12,000.
Other current assets. Okay, sir.
Accrued, this is accrued interest on investment. So 9 notes is over now. Next, we will go with P&L account. P&L account. Income statement, meaning income statement. So
right
income
now
statement
we
starts.
wrote, so right now we did schedules. Sir.
Yes, 10 schedules we have done. Next, sorry,
Okay.
8 schedules.
Only
we
10
have-
schedules were there, so only we did 10.
Yeah, only 9 schedules we have done. 10 starts
Yeah.
from income statement.
Okay, from 10 it's income statement. Fine.
Yes, income statement. Now we have done almost the balance sheet items.
Yes, sir.
So balance sheet notes is over. Now we will go for revenue from that is P&L account. P&L account starts with what? First heading.
P&L account starts with P&L account 20,000 P&L.
No. First, there is a format, na? Income statement format. First, you have to start with.
Okay. That is again equities and liabilities, shareholders fund.
No, that is balance sheet. That is balance sheet. Income statement. I'm speaking of income statement.
Income statement profit prior to tax, before tax.
Okay, before that, revenue from operations. It starts from revenue from operations. You remember?
Okay. Yes.
How do you get revenue from operations now? I told you this. Note 10,
yes,
revenue
sir.
from operations.
Yes, sir.
So it is nothing but sales minus sales return is called as
Revenue
from operations. So I'm writing here sales. Next, minus sales return. Sales minus sales return.
Yes,
so
sir.
this is called as 3,70,000, correct? Total is 3,70,000.
Yes, sir.
Next, continue with that other receipts. Other receipts, any other income you find in the question, see, any other income you find. Yes, in the adjustments, accrued interest on investment, it is an income, correct? Once we have taken in the balance sheet, I've written 1 plus. So where you have taken interest on investment, do you remember? In the note,
Yes, sir.
only it's there. Where?
Interest on investment.
Yes, I told you non-current, other current assets, interest on investment.
Yes, sir.
So once we have taken there, now in the P&L account, you're taking other receipts, call it as 12,000. Did you understand? Accrued interest on investment is 12,000. Once we took it in balance sheet also, correct?
Yes,
balance sheet schedule, I told will take it. Okay. So I took it in current assets, other current assets. I have taken interest on investment. And one more, I'm taking it in P&L account from other revenues. Okay. So sales minus sales return is 3,70,000. Other receipts accrued in investment is 12,000. So 3,70,000 plus 12,000 will be
3,82,000.
2,000. So
Yes,
this is called as revenue from operations.
Yes, sir. My only fear is will I be able to remember so many schedules?
It is too long, too lengthy. Yeah.
Yes, sir. At least I'll attempt, sir.
Yeah. Okay. But the format, if you learn, at least you can write the format. I told you revenue from operation, sales minus sales return. So that you just try and okay, glance.
Yes, sir. Yes.
Or else I will give you in a return format if possible. I will send you what is what. Okay.
Yes,
You
sir.
just revenue from operations is nothing but sales minus sales return. Okay.
Yes, sir.
Like that you remember. Okay. Then sales minus sales return. After that, you will be having note 10 is over now. Apart from that, you also have note 11, 12, 13, like that. You have purchase of stock in trade. So now go back to the problem. Purchases, you will find it. Purchase.
It's a stock 60,000.
No, purchase.
Okay, okay.
Purchase you
Purchase.
take 240 is there. Put it as purchases.
There is
Next
no purchase return, sir.
purchase. The next only it is there now. Purchase return.
Okay. So it will be 220,000, sir.
Hmm. No, we should, yes, minus purchase minus purchase return is 220,000. Call it as purchase of stock in trade. Next one is change in inventories. I told. Do you remember? Change in inventories. I told. Opening stock minus closing stock is called as change in inventories.
Yes, sir.
So first stock is there. See, stock. You take this stock now. Now, opening stock minus closing stock is called as change in inventories. Opening stock. Closing stock will be there in the adjustment. So closing stock already you have taken in assets. I told you, if you remember this, assets. While doing the assets, first time, it is already taken in closing stock. I will show you, wait. Inventories. Inventories is nothing but closing stock, I told you. See, can you see the note 7?
Yes, sir.
So once it was taken there, closing stock, once it was taken there in the balance sheet, now you should take it in P&L. See, closing stock. Now you are taking it here, where you are taking change in inventories. Are you able to understand?
Yes, sir.
1,20,000. Yeah, closing stock is 1,20,000. So that is. So opening stock minus closing stock will be 60 only, correct?
Yes, sir.
Yes. Next is, this is all the notes now. Next is employee benefit expenses. Employee benefit expenses is all this wages and salaries.
Yes, sir.
So now you put it here. First you call it as wages now. Next, salaries. Here it is there.
Yes, sir. 20.
So salaries is here.
Yes, sir.
50, 20 will be 70. Okay. Employee benefit
Yes, sir.
expenses over. The next one is other operating expenses. Any other expenses you find in the problem, put it in other operating expenses. As I told, see, audit fees.
Yes, sir. Interim dividend, audit fees, directors fees, freight charges, stationery.
One second.
Yes, sir.
Yeah. Audit fees, directors fees, freight fees, and all these things. So now I'm going to write it here. Yes, already it is there. Audit fees, how much? 10, 15, 15, 12. Okay. Audit fees is 10,000, 10, 15, 15, 12. So now you do the total of it. So 15, 15, 30, 40, 52,000.
Yes.
Now you will have selling and distribution expenses. So sales related, we have taken all these things now, except interim dividend. Now we have not taken interim dividend.
Yes, sir, and P&L also.
An account. So it will come only once. It will come only once. So where it will come, that you have to write it. Okay. Yeah. So selling and distribution. Now we have done almost all these things. Now P&L appropriation account will come in the income statement. Interim dividend is also coming in the directly. Interim dividend will be taken there only. Okay.
Yes, sir.
Where it will come, I'll tell you. Interim dividend. Dividend paid, P&L account, it will come there. So while doing the P&L account, no notes to that, directly you are going to take this too. Okay, now closing stock, what are all not finished now, we'll take that. Closing stock, as I told, once you took it in asset, once you took it in P&L, depreciation on buildings, only once you have taken. Where you have taken? In the balance sheet. Now you should take it in income statement.
Yes, sir.
Depreciation on building, 10,000 it is there. No, 80,000 into 10% will be 8,000. I think it is done twice. Depreciation on building, closing stock is done. So now depreciation on building, we have done it. Depreciation on building, 1 plus 1, 1 plus 1. Make provision for tax, it will come under balance sheet. Now we are going to take reserve fund transfer lab. Once we have taken, once we have already taken in the balance sheet. Okay, now next one more thing. Bad debts is there. Bad debts is coming under sales. Bad debt is coming under sales. Now you should write once again 10,000.
Okay, sir.
Okay. So bad debts, right? 10,000. So now directly you are going to prepare income statement and balance sheet. So now just to copy it from here. Revenue from
Yes,
operation.
sir. All the from sheet number 2, from note number 10, we have to start just all the totals you have to just write down.
Yeah. So note number 10 is revenue from operation is 3,70,000. I'm going to
Yes.
write 3,70,000. Next, other receipts. Other receipts was 12,000. You have included there. So other receipts is 12,000. So total will be 3,82,000. Next, expenses. Purchase of stock in trade, you have done. Purchases of stock in trade. You can see 2,20,000 is there, correct?
Yes, sir.
So just write whatever was there in the question, 2,20,000. Changes in the inventories. Changes in the inventories means opening stock minus closing stock. 60,000 we got.
Yes, sir.
So just write 60,000. Next, employee benefit expenses. Employee benefit expenses total was 70,000. So I'll just write 70,000. Other operating expenses. Other operating expenses was 52,000. Now we are going to write other operating expenses as 52,000.
52,000.
Selling and distribution expenses, only bad debts was there, 10,000. Finance cost, there is no finance cost here, leave it. Depreciation and amortization. Depreciation was depreciation on buildings was there, 8,000 was there, write it here. Finance cost is not there, 8,000 is the finance cost. Now, so if you do the total now, total of A is 3,82,000. Now you just do the total of this. expenses. 4,20,000, correct? No. Purchase is 2,30,000, 60, 70, 52, 10, 8. This is 3,72,000. This is 3,10,000. This is total. Employee benefit expenses 70. 3 lakh, 3,50,000. So now this will be giving you profit or loss for the year. I think some mistake in the problem now. We can't rectify after all this actually. Okay, this is how for the format is will be. Okay, A minus B will be called as profit and loss for the year. Okay, hello, hello, hello.
Yes, sir. Yes, sir.
Provision for tax. Next will be provision for a tax. So provision for a tax will be given in the problem. You can see provision for tax. Provision for tax will be the adjustment. So already we took once, we should take it in the balance sheet. Another one will take it in the P&L account, provision for tax.
Okay, so 3 times.
2 times, only 2. One
Okay.
will take it in balance sheet note, correct? Provision law under short-term provisions.
Yes, sir.
So there it will come. Now it is going to come in the P&L account. Oh,
Okay, sir.
you're there?
Yes, sir, I'm there.
Actually, my mobile got switched off.
It's okay, sir.
Yeah. So it is just like the same thing. Now
Yes,
do
sir.
all
Profit
the
after tax. Provision for tax 25,000. So we are minus 62,000 from 25,000.
Oh.
37,000.
Yes. Now take all the provision for tax and previous year balance. Previous year balance is here.
Okay, that's previous year. Okay, that plus 20. So that will give us 57,000 total.
Yeah. No, answer you just refer in your notes. Okay.
Yes, yes. Okay, sir.
Just will see the problem now. That's all. Okay.
Yes, sir.
So minus transfer to reserve fund. See, transfer to reserve fund will be here. 25,000 to reserve fund. Once we have taken.
Yes, sir. We're taking again.
You
Yes.
remember liabilities, balance sheet, reserves and surplus we have taken once.
Yes, sir.
So that was once in balance sheet. Now we are going to take in this here. Okay.
Yes, sir.
So that is giving you surplus carried to balance sheet. You got it?
Yes, sir.
Next one is the balance sheet now. We would have done some notes already. So just copy paste here. First one, share
Yes, sir.
capital.
The same thing. Yes, sir.
Same
Shareholders
thing.
fund.
Share capital and all those things. Okay. First,
yes, sir. Yes.
1 to 9 notes, whatever is there, just put it here.
Yes, sir. That's enough, sir. No need to do all that again. It's the same thing. We have to just copy paste all the
just
totals.
go with the format. Okay. Just go with the format. Shareholders fund, share capital. I'll just glance you within 3 minutes. I'll try to glance. Share capital, you will have equity share capital and then
yes, sir.
Or paid up capital minus calls in arrears minus add forfeiture of shares.
Yes, sir.
Reserves and surplus, reserves, transfer to reserve fund, all these things.
Yes, sir.
And long-term borrowings, you will have debenture.
Okay. No, nothing else except debenture, sir. Only debenture.
Only debenture will come. Apart from that, sometimes long-term loans and all these things will be there.
Okay, okay. They will tell long term, no, sir.
Long-term, yes.
Yes.
Next, current liabilities, trade payables. Can you recollect trade payables? What is the things I told?
Yes, sir. Trade payables is this thing, opening stock minus closing stock.
No. Creditors and bills payable.
Sir?
Trade payables is creditors and bills payable.
Yes. I'll write it down. Yeah.
Then short-term provision means dividend. All these things will come here.
Yes, sir.
Then assets, fixed assets, I think you know this. Okay.
Yes, sir. Fixed assets, land, building, plant machinery.
Okay. So this is how we are going to do it. Okay.
Yes, sir.
So go with the, what I can say,
Format, sir.
format. You just try to remember and you just try to write it. All the schedules you write, whatever you know the schedules, you write it. Okay.
Yes.
Whatever format
Yes.
you know, just put the format. At least you'll give some mark. But you know the adjustment part, it will be difficult. Go with the profit prior to incorporation.
It's okay, sir, because I think by cement, sir, which is cement is like almost 2 weeks away, sir. After this exam gets over, my exam gets over at 16th. So
Exam
after
gets
that,
over on?
we have like 16th, sir. All the exams.
Okay.
So after that, we'll have cement. That is the final exam. That is
Okay.
on 7th, sir. Next month, 7th.
July 7th.
July 6th, sir. I guess 6th or 7th.
Oh, short time only. Okay, fine.
Yes, sir. So I will be again coming to the classes for first unit, second unit, and we'll revise everything.
Okay. I think one more time. See, for your final exam, my suggestion is for your final exam, you go with valuation of goodwill.
Yes, sir.
And
valuation of goodwill.
Valuation of goodwill, profit prior to incorporation, holding accounts. You can keep this as an option in your final exam.
Yes, sir. They'll only ask 2, sir.
Sorry?
They'll give like a, will they give like an option for only 2 out of 4?
Yes, they will give you option. Okay. Wait, I think it is ending. Okay, you write your exams. I'll call you tomorrow. Okay.
Yes, sir.
Okay. Good luck. Do well. All the best.
Yes, sir. And also, please, you have my thoughts and prayers for your child.
Yeah. Sorry.
No, sir. You have my thoughts and prayers, sir, for your child.
Thank you.
Because,
Thank you. Oh, thank you so much.
It's fine. I hope she is doing better, sir.
Yes, she is doing well now. Probably by tomorrow she'll be fine.
Yes, sir.
Okay. All the best.
Yes, sir. Thank you, sir, for teaching me. I'll profit right incorporation. I'm already thorough with that, so
okay.
It will be fine, sir.
Okay.
Only thing is, yes, sir. That one reverse time ratio again I forgot, sir. So that